What's up, everybody? Joe Brown here with the Heresy Financial Show. Now, you guys know that I have talked at length countless times on this channel before about the importance of owning gold and why it's important to not put all of your eggs in one basket. Yes, keep some at home in your physical possession. Possession is 9/10 of the law, right? It's also important to diversify, not have all your eggs in one basket, making sure that if you need to leave, you've got some stored in other countries for liquidity purposes, all of that. And so not all storage services are created equal, though. So I invited Patrick Yip, he's the Director of Business Development at Apmex and at OneGold, to join us on the call today to talk about some of these things. And they were kind enough to sponsor this video as well. And so today we are talking about how inflation impacts things like stocks, how past inflationary cycles have impacted gold and what that suggests the gold price might do going into the future, and important things to look for in a storage service. So Patrick, thank you so much for joining us today. I'm really excited to talk to you.
Excited as well.
Just to start off, we have to touch on what has been happening with the precious metals recently. The Federal Reserve just raised rates for the first time in years in an effort to combat inflation. We've seen a little bit of volatility in the metals recently as a result of that, and what's been going on in Russia and Ukraine. What are your thoughts on what's been going on with the price of gold and silver over the last couple of weeks?
Yeah, so it's definitely been a wild ride. I think markets tend to overreact. You look in 2020 when COVID started, people feared the worst. Everything sold off. Silver went down to $12. The drop was short-lived, obviously, for those people who saw it. You look at the war, people feared the worst. I heard people talking about World War III. Certainly that didn't happen, or at least not yet. Ukraine is saying they don't expect to join NATO anytime soon. I think a lot of the war premium has gone away, which may create a nice buying opportunity for the precious metals, because I don't think the fundamentals, which is inflation, has really gone away. And today the Fed did a token rate hike of 25 basis points, which we're still a long way away from tackling the 7.9% inflation.
Yeah, absolutely. Well, speaking of inflation, we're at 7.9% as of the last reading. That's just the official numbers. And they just raised interest rates, the Fed funds rate, to 0.25%. And I think they said they'll get to 1.9% by the end of the year. Inflation's at almost 8%. So what are you expecting to see with inflation? Do you think the Federal Reserve is going to be able to combat it in any meaningful sense with these rate hikes?
Yeah, so I think it's important to look back at history and let's see if history could guide us to what may happen in the future. So inflation is basically at the highest levels in 40 years. So basically since 1982, inflation has not been this high. So I have to look way back. So let's look at the 60s. Let's look at the 70s. In the 1960s, it took the Fed 9 years to resolve inflation. And in the 1970s, it took the Fed 5 years to resolve inflation. We're currently right now in year one. So if you look at inflation in January of 2021, so just about a year ago, inflation was only 1.4%. People are certainly feeling the pain just with 1 year of inflation. And the reason why people need to be concerned about inflation is if you look at the 5 years or the 9 years that it took the Fed to resolve inflation in the past, 5 years of 7.9% inflation is going to erode about a third of your wealth, and 9 years of 7.9% inflation would erode over half your wealth.
Right. And in light of that, one of the long-term main investments that people are in, the typical 60-40 portfolio, stocks and bonds, it's pretty logical just looking at bonds and saying, okay, well, in light of inflation, a bond paying 2% is not, the best thing to put my money in terms of protecting from inflation. And so most people then default to stocks. We were talking earlier about the track record of stocks, specifically during the high inflation in the 70s. Talk about that.
Yeah, so going back to the 1960s, stocks actually lost 26% nominally over the 9-year inflationary period. And in the 1970s, stocks gained 4% over the 5 years. But it's important to note these are nominal changes and don't factor in the erosion of purchasing power. So in the 1960s, inflation hit 12%. In the 1970s, early 1980s, it hit 14.8%. So much higher than the returns you would see in the stock portfolio.
Yeah, absolutely. Now, given how inflation and the stock market interacted during those periods of time, Obviously, once the gold window was closed, we saw a massive bull run in gold. And so if investors at that time would have been allowed to invest in gold at that time, they would have preserved a lot of their purchasing power. What about now, though? We've seen, a lot of people start to talk about, gold is dead, or Bitcoin, or other currencies, central bank digital currencies. Long term, how does gold react with inflation?
Yeah, that's a good question. So looking back at the 1960s, you mentioned gold was pegged. It was pegged at $35 an ounce. It actually increased fivefold from $35 to $200 in the 60s. And then in the 70s, it increased from $100 to about $850, so about an eightfold increase. I think it's important to note that many investments are cyclical. You look even in the modern times, 2000 to 2011, you hear that stocks had a lost decade. Basically, the S&P 500 went from 1450 in 2000, went down to 1250 11 years later in 2011. So basically a lost decade for stocks. Gold, on the other hand, went from $250 in 2000 to $1,900 in 2011. And then fast forward to 2011, you had the reverse. Gold had a lost decade. Basically, it started at 1900, went all the way down to 1050, and now it's back at 1900. So you essentially would have been even over that 11-year period in gold. Stocks, on the other hand, went from up 4x from 1250 to about 4800 at its peak for the S&P. So I think given the current economic climate, given inflation, I think it's time that the cycle is almost reversed, where it may be the time for stocks to struggle and gold to shine. I was looking at gold made its most recent low in 2015 of about 1,050. I would not be surprised to see multiples of this level. In fact, I was listening to a podcast with Rick Rule a couple of weeks ago, and he said he would not be surprised to see $4,000 or $5,000 or $6,000 gold.
Well, in light of that, and everybody who watches this channel knows that I'm a huge proponent of owning gold to preserve your purchasing power. Silver, I think, has the potential. It's like a higher risk, higher reward type of metal, a little bit less stable in terms of its purchasing power, but has a much higher chance of making you money. So given that, obviously Apmex, massive metal dealer, and OneGold, very unique, very user-friendly platform that I've talked about on this channel for a long time. Give us the rundown on what OneGold is and how it works and how it's unique compared to other platforms.
Yeah, that's a great question. So at Apmex, we like to offer solutions for everyone. We'll gladly sell you physical. In fact, I like physical too as well. The nice thing about physical, it's in your hand, can't be hacked. It's aesthetically pleasing and collectible, easily passed generation from generation. Taxes are self-reportable, which I highly recommend you do report your taxes, but that's another benefit there. Some of the cons from physical precious metals is they're often not insured. We had a couple of people who had millions of dollars in precious metals purchased through Apmex, and they decided to use a solution through OneGold because it frankly offered a better solution for them. What OneGold is, so back in 2018, Apmex partnered with Sprott, which is a large alternative investment manager, to come up with a company called OneGold, which allows customers to buy, sell, and trade vaulted positions of precious metals stored around the world. Some of the pros about OneGold is it's super easy. I say it's probably the easiest way to own precious metals. Customers have title to the metal. Positions are insured, they're audited. Pricing is attractive since OneGold typically sources 400-ounce gold bars and 1,000-ounce silver bars and puts these in vaults around the world. And then by buying a position, you're essentially getting like a fractional ownership of like a 400-ounce gold bar, 1,000-ounce silver bar. It's highly liquid. You could sell it anytime, 24 hours a day. And if you ever decide that, hey, I don't want this vaulted position anymore, I want physical, we actually offer a redemption option where you could swap one of the positions in gold, silver, or platinum for any of the 25,000 products available at Apmex.
So that's one of the questions that a lot of people have regarding vaulting some of your metal, because like you mentioned, you can store it at home and you don't have the counterparty risk that way. But all it takes is somebody who knows that it's there, can come and get it, or another FDR type situation. if the government wants to know, they'll know that you have it. If they want to come and take it, they can come and take it. That's not necessarily a fight that you want to try and win. Or if you needed to liquidate it very quickly, or if you needed to leave the country with the wealth, there are definitely advantages. Maybe not 100%, but there are definitely advantages to using a vaulted storage service, especially like OneGold, where you can choose where it's stored in the world to diversify some of that risk away. And then the other thing that I really like about a service like OneGold is that, like for silver specifically, buying small amounts at regular intervals. If you're just going out there and you're buying, silver eagles, once a week, something like that, you're going to pay so much for the actual metal. And so you'll be able to allocate much more of your money to the metal if you do it through a vaulting service like OneGold, store up a large amount. And then once you've got a large amount, then you can request delivery. If you want to take delivery of it, you get a lot more metal for your money.
Yeah, I agree. That's a good point too. Another thing that I personally like using OneGold for is you look at Silver Eagle premiums right now. They're hovering around $10 and higher. I personally don't want to pay $10 over for an ounce of silver. So I get into OneGold where silver is sold at 2% over spot. And then I think premiums will go down eventually when some of the supply chain issue gets resolved, when the mints start making more product. And then I intend on redeeming some of these positions at OneGold for actual physical silver at a later point, but I'm just not paying the $10 premiums right now.
Yeah. Yeah, absolutely. I'd like you to touch on one more thing about how this works, because I know that, for a lot of people who haven't used a vaulting service, it seems a little bit, like sketchy. Like, how do I know that if I want the metal, I can get it? Especially, let's say if there's like a shortage of eagles or something, because you mentioned there's, let's say, a 1,000-ounce bar. If you don't own 1,000 ounces, you own a piece of that bar. That can sound a little bit sketchy, but what you're actually doing is making sure that the metal is there, and if you need to, you can be the source of the metal for the mints or whoever is turning that into the end product that is getting sent to the customer, right?
That's correct. So what OneGold does is we first start with various vaulting arrangements with Brinks, with Loomis, with the Royal Canadian Mint. We set these agreements in place. We then source certain metal, 400-ounce gold bars, 1,000-ounce silver bars from various dealers, mints, and then we place this metal inside the vault. We then make it available for sale. And it's important to note that we actually would only sell the metal that we have in stock. So during periods of high demand, let's say the silver squeeze, for example, we had a run on silver. Everyone was buying silver. There's a point in time where we had to pause silver sales because we said, hey, our demand is exceeding our supply. We're not going to sell an unallocated promise. So we actually paused silver sales until we could physically get more silver in the vault. And then we would open up silver sales again. And as you mentioned, customers own, let's say you have 100 ounces of silver, you have 100 ounces in a 1,000-ounce bar. Obviously, I can't chip off 100 ounces out of this 1,000-ounce silver bar, nor would you even want it because it would be hard to authenticate. So that's why we offer like a redemption option where you could essentially swap it and take, let's say, 100-ounce Johnson Matthey bar, or you want 100 Silver Eagles or whatever. Obviously, there will be a small retail premium depending on what product you're getting. The premium will be higher for coins, less for a 100-ounce bar, and so on like that. But there is a little premium to swap it from OneGold to a retail product.
Yeah. Yeah, I actually remember that. Now that you mention it, it was a Saturday or a Sunday over the weekend, and OneGold shut off the ability to purchase silver for, I think it was like 24, 48 hours or something, because everything that you had ran out. And so it's like frustrating potentially to see that. Then you realize, okay, well, if I was to use something that just didn't shut it off, then I might be thinking I'm purchasing something that they're expecting they could go out and get. And then what happens if they can't get it? Then there's a whole, that's a much bigger trust issue. So it's far better to be able to, have the faith and the trust that, hey, they're actually, I'm buying something that's actually there. They're not just promising something that they'll try and get in the future.
Yeah, that's a great point too. I think with the GLD and SLV too, they just kept on selling metals. And if you read the prospectus, they said the metal could be held at a custodian, sub-custodian, or sub-custodian of a sub-custodian, which at some point is like, is the metal even there?
Right. Yeah, absolutely. Well, very good. I'm going to put links to both Apmex and OneGold in the description below for anybody who's interested in checking it out. And thank you so much for joining us today, Patrick. It was great.
Great. Thanks, Joe.
Yeah, my pleasure. Have a good day.
You too.